Hello, this is Wes, and you are watching the Knoxville Divergence Trader and Nashville Trader robots indicator installation and usage video. Now, when I said indicator just now, that was a lie. There's no indicators involved in this particular process. This is just the robots. We're going to start really quickly with how to put them on your platform. I'm not going to go into this very much because you're probably tired of it. Not only that, but if you go to the indicator section of the site, there is a more extensive video about how to install these. But for those of you who skipped past watching that video, there's just one thing that I really wanted to cover before we get started with how to use them. And that is, you should close out your platform, close it out completely, and come over to your MetaTrader 4 Experts folder and delete every version of the Knoxville Divergence Trader and Nashville Trader that you have. So for instance, I have Knoxville Divergence Trader.ex4 and Nashville Trader.ex4. And I also want you to delete mqlcache.dat. Delete all of them. Delete every version of the robots that you have and the mqlcache.dat. And if you did not watch the indicator video, then I want you to delete every version of the Knoxville Divergence indicator that you previously had, plus the mqlcache.dat file before putting the Knoxville Divergence V1 indicator on your platform. Make sure that you delete those files. They can influence how the new indicator and how the new trading robots will function if you have them still on your platform. And the MQL cache saves information about how those things did and what they did. So if you don't delete that, then it can actually mess with it as well. So that's just something I wanted to cover before we get started with how to actually trade them. So to recap, delete every previous version that you had of the robots and the indicators, and also delete the mqlcache.dat files before installing the new ones on your platform. And I'm not going to really go over how to install the new ones on your platform because, well, I already covered them in some other videos. I'm just going to open up my platform and we're going to go ahead and get started. We have a lot to cover and not a whole lot of time to do it in. And we're going to start with the Nashville Trader. So the first thing you need to know is how to put it on a regular chart. So here I have the pound dollar 1 hour chart. And to put it on your chart, you'll need to open this navigator window over here on the side. And if you go up here to the top, these little buttons up here, the navigator is this button that has a gold folder and star on it. And you can turn the navigator on and off by clicking that button. And that's pretty annoying now. So we're going to turn it on, and we're going to click the drop-down menu for Expert Advisors. Now, for the expert advisors, these are trading robots. It does not necessarily mean that every expert advisor is something that places trades, but for our purposes, the Nashville Divergence, or the Nashville Trader and the Knoxville Divergence Trader are trading robots. One quick note, these should not, I repeat, should not replace full-time trading. They should not replace full-time trading. These are simply tools to help you in trading when you cannot be at the computer when alerts go off. For instance, Rob uses the Nashville Trader and Knoxville Divergence Traders on specific pairs that he sees setting up that he wants to take trades on overnight but cannot be awake for. But during the day, you will see Rob updating charts and updating trades that he's placing on these platforms or on these charts in the TFL 365 site. He trades these systems manually when he is awake. And you can do the same thing. These should not replace manual trading, but they certainly help when you sleep. And also, if you backtest them and you find settings that work for you, which we have had, and we have found that there are settings that work pretty well for these, If you find settings like that that work for you, then great. If you find in backtesting that it does make money on a certain currency pair at a certain time frame with certain settings, then that's fantastic. And by all means, backtest, and it possibly can replace your full-time trading. But they are mainly meant to be tools to assist you in trading on your favorite pairs whenever you see setups you would like to take. So, now that all of that is out of the way, we're going to go straight into how to use them and how to backtest them. So first we're going to start with the Nashville trader. We're just going to click on this Nashville trader, and then we're going to drag and drop it onto the screen. It is as simple as that. Now, I have the candles back function here, and this should be set to 30 if it's not already. Oh, actually, sorry. It is set to 150. The code is automatically set for a Nashville trade for the 30 candles. The candles back, sorry, I apologize. One more time. Candles back should be set to 30 because that is what a Nashville trade is. It will look back in time at the previous Knoxville divergence lines. Oh, sorry. And it will see if it is 30 candles back or however many candles back you have set on here. So you can play around with this if you'd like, but default Nashville trades are 30. And this will likely be a default setting when you get it. But just for all intents and purposes, a Nashville trade is 30 candles back or less. Magic number. We've had a lot of questions about magic numbers. If you put a Nashville trader on a pound-dollar 1 hour chart, and you put a Nashville trader on an Australian dollar US dollar chart, you need to have different magic numbers. It doesn't matter that it's the same expert advisor. They need to have different magic numbers or they will fiddle with the other trades of the other currency pairs. They'll just start messing with each other, and it gets pretty chaotic if you don't change the magic number. So just make sure you change the magic number whenever you put a new one on another chart. One thing to note, you cannot put multiple expert advisors on one chart. If you put a Nashville trader on this chart, you can't put a Knoxville divergence trader on this chart as well. You have to open up a new pound-dollar 1 hour chart. Okay. Lots, if you want to use a manual lot size, a specific one size lot size for every trade, then that's fantastic, and you can just put it there. However, we have put in a new function, which is trade size by risk, and then risk percentage. Risk percentage is how much of your account you would want to risk per trade. So, say you have a $10,000 account, and you only want to risk 1% of that account, that's $100 on that account, then your stop loss will be set, and then it will be set by the system itself, and then the lots will be changed based on the risk percentage. So that whatever your stop loss is, let's say your stop loss is 20 pips, and you only want to risk 1%, which is $100, then it will set your lot size to be $5 per pip. So $5 per pip times 20 pips is $100. This is not an exact science. It's not exact down to the pennies. It's more exact to about the dollars. So it's going to be, for the most part, correct and for the most part accurate. But occasionally, instead of risking $100, you might end up risking $98 or $102. And you'll kind of get a feel for that whenever you are actually going through your testing. And it just depends on the currency pair itself. But if you want it to trade by risk, just set this to true. I'm just going to leave it at true for now. And then risk percentage is 1. You can change this to whatever. You do not need to compensate for any type of digits or anything else. 1.0 is 1%. 1.5 is 1.5%. 10 is 10%. So on and so forth. Use trailing stop. We have already gone over this before. The trailing stop again is at 20 pips profit. The trailing stop means that it will move the stop to within 10 pips. And the trailing stop increment is every 2 pips it will move the stop again. So 20 pips profit, it'll move it to 10 pip trailing stop. At 22 pip profit, because of the trailing pip increment, it'll move it to within 10 pips again. Move to break even. That's pretty obvious. If you set that to true, then, quite frankly, at 20 pips of profit, it will change the stop loss to your break even mark, which is where the trade opened. Recent exits. Recent exits will look for recent highs and lows to place a profit target and a stop loss. Now, one thing to note about this, you can also put the recent exits plus pips, so it would be plus or minus 5 or whatever, how many pips you put on here. If you just put 0, then it will be at the recent high or low. If you put a negative number on a high, let's say for this trade here, like if this were a trade right here, then for this, it would be a sell. It would put the stop loss up here. If it was negative, if you put like -5, then it would actually put the stop loss 5 pips below. If it was just plain 5, then it would put 5 pips above. And so on and so forth. So I'm going to bring the Nashville trader back up now. Okay. So going down here, that's the recent exits. One more thing to note about recent exits. If the recent exit, like the recent high or low, let's say for this trade again, it will look back through this divergence setup here for a recent high or low. It'll look through these candles. So if your trade opens here, then it can't find a recent low because the recent low is too close, which is right here. So instead, it will default. It will default to the hard exits. If it cannot find a recent high or low for a stop or profit target, if it's too close to the market price, it will not place it at that recent high or low. It will default to the stop or profit target. So make sure you put something in here that's reasonable, because at some points it may default to it, as you can see from this chart here. This one would have defaulted to the hard profit target, which would have been 20 pips. Okay. The last exit strategy would be use fibs. If you use fibs, it will default to using a recent high or low as a stop loss. So if you set that to true, then it will sell or buy to the nearest Fibonacci level, and that's all covered in Rob's training videos. And it will do a profit target to the nearest fib. Sorry about that. Okay. There is also the break even at fib function. This is a new function. This is something we just added. If you set this to true, then it will default. It will move the stop to break even. Sorry, it will move the stop to break even at the first fib level. So normally it would take a profit at the first fib level, but break even at fib will make it so that it will move the stop to break even at that first fib level, and then it will trade to the second fib level. And we'll go over that shortly when we go through how to actually backtest these. So break even at fib, that's cool. That's another reason why these shouldn't replace full-time trading, but rather should be used as tools to take trades whenever you decide that you want to take a trade on something. For instance, let's say you look at this and there's actually 2 or 3 divergence, cell divergence levels here. And then you think, oh, well, I would like for this to be a Nashville trade whenever a new arrow pops up. And let's say this arrow isn't here yet. Then you can put the Nashville divergence trader on the chart and make it so that it will break even at the nearest fib, and then it would trade to the second fib. And then you can just let it go, and it will trade to the second fib, however it is you want to do it. So that's why it should not replace full-time trading if at all possible, because you'd have a little bit more control over where it's going to actually trade to. Easy enough, right? Okay. There's a couple more things that I'd like to note as well. You can only have one exit strategy at a time. You cannot use recent exits and hard exits at the same time, nor can you use hard exits and use fibs. You have to have one of them set to true and the others set to false. If you set 2 of these to true at the same time, it will screw it up. It will make it so that maybe a recent exit will be the first one it defaults to, but then the next function comes up for a hard exit, and then it changes it, and then the fibs comes up, and then it changes it again. Make sure that only one exit strategy is used at a time. One other note, do not use move to break even and trailing stop at the same time. It will not work. It's going to get all funky, and it won't be a trailing stop. It'll keep moving the stop to break even or whatever else it does. It just does not work. Do not use trailing stop and move to break even at the same time. Use one or the other. You can use the move to break even fibs at the same time as a trailing stop if you would like, but you can't use both the trailing stop and this move to break even at the same time. It will not work. It will get all funky. All right. And in fact, I will go ahead and change the Nashville trader to default at 30, so that nobody gets confused. All right. So now it will default to 30. Okay, so now we're going to go over the Knoxville divergence trader because it's considerably simpler actually, but there are some differences. Candles back is set to 150. That's just the default. It will take any trade that has up to 150 candles. Slippage is obvious. Magic number we already went over. Lot sizes and the trade size by risk. That's still the same thing we just went over in the Nashville trader. Use trailing stop and move to break even are the same. Recent exits is the one that's defaulted because that is the one that was in the original Knoxville divergence system. However, if you prefer to use hard exits, set this to true and then turn off recent exits. You cannot use multiple exits at the same time. That's what we just went over before. Also, a similarity between this and the Nashville trader, if you use recent exits but the recent profit target or stop loss is too close, then it will default to hard exits. So make sure that these are reasonable. Make sure that they're not something outlandish like 1 billion pips or something. Otherwise, you're going to have some very strange results. It'd be really cool if you got 1 billion pips, though. I mean, you could probably retire on that. So more power to you if you got 1 billion pips. All right, use SMA is the same as it was before. This tests very, 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 very slow. If you use SMA, it tests very slow. I would not use visual mode, although you can. I would simply I'd put it on a chart if you want to use this, and then put it on the backtesting and then just let it go for a while. I tested just several months using it, and it took probably 20 minutes to do so. So if you want to test years using that, then be prepared to let your computer sit there for a while, which is why it defaults at false. Okay, trade RSI entries. If you prefer the Knoxville divergence system, where after these two set up, like say this line and then this arrow, then it waits for a cross of the RSI, then that is cool, and you are more than welcome to do that. In this case, I probably actually would have taken this trade already. Yeah, because afterward, it waits until after this arrow, or after whatever it is that's happening, after the arrow, or after, if the arrow is in between here, it waits till after the line is drawn. And then it waits for a cross below the 50 line. It doesn't just place the trade if it's below 50. It waits till it crosses above and then crosses back below the 50 line. So here it would have actually taken this trade right here, and it would be open right now. And it actually would have been open if it was a Nashville trade as well. So there you have it. That is trade RSI entries. The other is trade recent entries. Trade recent entries is the default one for this. It's default on this because that is what the original system was supposed to do. It originally was built to do trade recent entries. Okay, so a couple of notes about the Knoxville divergence system. Pay close attention to this because it's very, very important. You cannot use recent entries and recent exits at the same time. Trust me, it does not work. It just sits there and stares at you, makes fun of you a little bit, and then just completely explodes your computer or whatever you want it to do. It will not trade. It's not going to work. You cannot trade recent entries and recent exits at the same time. The reason for that is the recent exits are I completely lost a word for it, but they are figured out right as the trade opens. So trading recent entries, let's say for the sake of this argument, this trade here, if it traded recent entries and it basically put a sell stop right here, let's say it put a sell stop there, we'll put a line there. It uses the same function to find recent exits. So it would go back in time and it would find, whoa, what do you know, the same exit or the same profit target, and it just doesn't work. So it finds the same price for both of them and it's not going to work. You cannot use recent entries and recent exits at the same time. You cannot use recent entries and recent exits at the same time. Now say it one more time. You cannot use recent entries and recent exits at the same time. This will probably be an update for a later version as I figure out how to actually implement that. But for right now, you cannot trade both of those at the same time. If you use recent entries, which we have found to be probably the most successful entry, you need to use hard exits. Hard exits is the only way to go with recent entries. Now with recent entries, you can use everything else like break even and the trailing stop and everything, but you cannot use recent exits with recent entries. So recent exits is only something you use on trade RSI entries. Okay. Pips away is the last one on this list, and it is how many pips away from the recent high or low you would like to place the trade. So let's go back to this example here. Let's say this is the recent low that it finds to place the trade, and let's say you put 5 pips. Then it would place the trade, the sell stop, 5 pips away, which would be like right here. It's not very far away, but whatever you put it as, that's what it would be. All right, one last thing about the recent entries. Let's say the recent low was here because this expert advisor looks back over the course of the divergence setup itself. So from here, the start of this divergence line, all the way to here, which is where this arrow is, it looks for the recent highs and lows. So it obviously it would find a recent high, but the recent low might be too close. If the recent low is too close, then it will place the trade immediately. So in this case, it actually would have been taken, probably, maybe, likely, depending on how far away it found the low. It probably would have found the low right here, so it actually may not have taken that trade immediately, but it would probably be in it now. For the most part, this actually works out pretty good. See, for instance, this line wouldn't have been drawn quite yet, so it would have defaulted to these lines, and it would have found the recent high for a buy trade up here. And then when a new arrow came up, it probably would have found a recent high for the buy trade. Actually, probably at the same place, probably somewhere up here or whatever. But sometimes it does actually happen to be that it finds a recent low too close, so it just takes the trade rather than placing it somewhere else. This may be something we work on for the next version, but for right now, it works pretty good, so we're going to leave it as it is. Another thing is that before we had a problem with if the profit target was too close, then it just threw an error and it wouldn't place a profit, or if there was a stop loss that was too close, it wouldn't place a stop. That has been corrected. So if it's too close, then it will default to the hard stops, just like I had talked about before. So if the recent high or low is too close, it will default to hard exits, which is the stop and the profit here. So make sure these are reasonable things to look at. Okay. Now, how to backtest these. To backtest these, you need to open up the strategy tester program down here at the bottom. And to do that, just go up here to this little magnifying glass. It says strategy tester when you hover over it, and you click on it, it opens it up. We're going to start with the Nashville trader. So if you go over here to Expert Advisor and click on this drop down menu, you can go and find Nashville trader. I'm just going to leave it on the Australian dollar, US dollar. And I'm going to put it on every tick because that is the most precise method to place these trades and to test things. If you do it on open prices only, then it's only going to open trades at open prices, and so that just doesn't work very well. So I'm going to leave everything else as is. Sorry, it's an alarm on my phone. Okay, so I'm going to leave that as is. And from here, you can see visual mode. This is if you want to see the chart moving as the Expert Advisor is going. And use date. This is if you want to use a specific date, which obviously you probably do. I'm just going to leave it as January 1st to October 30th, and we won't go through the whole thing. But the last thing you need to check is expert properties. You need to make sure that this is what you want it to be. So I'll leave trade size by risk as is, and I'll just leave it at 1%. Use trailing stop, move to break even, recent exits. I'm just going to leave it false. I'll just leave it at a hard exit so we can just see it kind of moving along. But you can change these settings to however you want them, and then press OK. Alright, so since we have visual mode checked, I'm just going to press Start, and it's going to pop up here. Now, on this chart, you can apply templates. I have a template I call Knox EA Test, and it just has the Knoxville divergence indicator on it. Easy enough, right? Okay. So we're going to let it move along. Alright, one thing to notice is that this little bar here is what controls the speed. There is a huge difference between 31 and 32. So I usually like to pause it when I put it on 32, because then it just moves really fast. I'm going to zoom out a little bit so we can see this. Okay, so the first trade was taken, and I believe I had hard exits on, so it just placed a 20 pip profit target and a 20 pip stop. This was a Nashville trade, and I believe I left it defaulted at 150. Oh no, there's exactly 30 candles, so yeah, that was a valid Nashville trade. And now we'll go to results, and you can see the take profit was put at 20 pips. The size was changed to 0.5, which is $5 per pip. And that was to accommodate the risk per trade size, or trade size by risk, or whatever it's called. And it profited $100. So that's pretty cool. I'm just going to keep going. We're going to watch it as everything goes on here. I'm going to go ahead and pause it here. Alright, so as you can see in the results, the first trade was $100. The second trade was $102. This is where it's not extremely accurate. It's not accurate to the cents. It's accurate more to the dollars, depending on what the trade size is, what your account size is, what currency pair you're dealing with, etc. It actually should have been $101 of profit, but it did 0.51, so it came out to $102. The next one came out to another $102, because technically this one was supposed to be 101, then 102. It's accurate enough, so just trust on that. Then the next one was $104. So etc., etc. That's how the trade size by lot goes. So that is backtesting the Nashville trader. And then if you want to see the results of those trades, simply stop the test and you can go to results. And results is what you already saw. So I had a losing trade back there at the bottom, which is $104. Alright, and so the profit, you'll see this graph here shows the profit of your expert advisor, whatever you're using. The report shows how much you made, total net profit, gross loss. So the gross profit plus the gross loss is the total net profit. So expected payoff, relative drawdown, maximal drawdown. Short positions 1% is 3. Trade or profit trades percent of total is 80%. And of course there's only 4 trades, so you know, kind of hard to go with that. But then you've got the rest of this down here. The largest profit trade was $104. The average profit trade was $102. And by the way, you may get a little confused by the fact that I went with the profit target, the take profit, the profit that you got here, as the trade size by risk, or the whatever it's called. It's actually the stop loss. Here it's the profit, but that's why I put the stop loss and the profit target as the same, so you could see from the profit how it was going. That may not make any sense, but if you look over here at the stop loss, it stopped out at negative $104. 1% of a $10,408 account is $104. So, yeah. All right, so that's the Nashville trader. As you can see, it placed all the trades it's supposed to, and it did a good job. All right, now the Knoxville divergence trader is pretty much the same thing. You're not going to see any differences really. You're not going to see any differences in the trade size by risk. That's what it's called, or anything else. But basically, the difference is the entries. So the trade RSI entries and the trade recent entries. So I'm going to keep that as true. And we're just going to watch it go on the chart here. I'm going to apply a basic template. Actually, I'm going to apply this other template so we can see the divergence lines. I'm going to back out just a little bit. I'm going to watch go. Okay. So as you can see, this is a good example of a time when the trade was like the recent low was so close that it just placed the trade immediately rather than waiting for a different low or whatever. So it placed that trade immediately. We're going to keep moving. Alright. So here you can see that the most recent line that it had dated all the way back to here. So the recent low, or the recent low for entering the trade was all the way down here, because that's over the course of this divergence setup itself. So you'll see that it probably will not take that trade. Oh, maybe. Oh, okay. So now some new buy divergence lines just came up. So it exited out of the sell trade and entered into a buy trade because it was too close to the recent high. And if you look down through here, the high of this particular setup was over here, and since it was already at that high, it just took the trade immediately and profited on it. And that is the Knoxville divergence trader as well. You can work with these, and you can change settings, and you can figure out what works best for you and what works according to your trading style the best. And as you see setups happening, you can just put the robots on your chart and have them trade the way you want them. And that way you don't have to be at the chart when it happens. In upcoming versions, we will probably be adding alerts to let you know when a new setup is happening or when a trade is placed. And we will take any suggestions that you have of things that you would like to see on the new versions when they come out. But for right now, enjoy these new versions and let us know if you have any questions.